TJ the Wheel Joe coming at you live. It is Monday, January the 6th, 10:41 a.m. Central Time, Texas time. We're going to do this one pretty quick because I've got 5 or 6 FaceTimes that I got to get to starting at noon, and I've got to squeeze in some lunch before then, guys. So we don't have a lot of time. So let's get into it. So first and foremost, we're going to follow the format. Quote of the daytime. Quote of the daytime. So let's get into it, guys. I hope y'all are doing well. I hope y'all had a good weekend. Hope y'all charged the batteries, spent time with the family, spent time with your God, recreation, did things that are way more important than the stock market. So let's get into it. Quote of the day. Wealthy people invest first and spend what's left, and broke people spend first and invest what's left. So which one are you? Do you have the wealthy mindset or do you have the broke mindset? Got to pay yourself first, guys. You have to learn how to pay yourself first. It is a discipline. It is a discipline, whether it's $50, $100, $200 a month. If there's one thing that I want to teach you guys on this channel, is that it's the surefire way to get wealthy in the stock market is just pay yourself first over the course of 20, 30, 40 years. If you want to become a millionaire in the stock market, just do that. Just do that. I call it the no-brainer approach to becoming a millionaire on paper in the stock market. It's just pay yourself first to the tune of a couple $100 a month. That's all you got to do. Invest in a major indice and call life good. That's it. That's all you got to do. If you want to do it quicker, maybe learn how to sell some options along the way. Let's get into it. With that being said, that's what we do on this channel. We sell options. Why? Because it just, it amplifies your returns. So how is the portfolio doing today? Well, let's just look at the State of the Union. For the last week, not too bad. For the last month, so-so. For the last 3 months, not bad. Year to date, okay. For the last year, y'all decide. All time in the portfolio, we're trying to get to that double, still quite haven't been able to get there. So that's where we're at. That's where we're at. How's the portfolio as far as health-wise? Well, I'd say it's pretty good. Individual cash is 3.2. The margin total is 8.6. Options collateral is 2.9. So yeah, not bad. Not even using margins to sell cash secured puts right now. So I'd say that we're pretty ready for a dip if there is one. If there isn't one, then, well, obviously we can't participate in that. But it's like, oh, well, you're trying to time the market. No, we're heavily invested in the market. We've just been managing the bankroll and we've been stacking a lot of wins along the way. So what I want to do is I want to focus on the positions that are expiring this month. So we've got a Clean Spark covered call that's expiring Friday at 12:50. We've got Enphase cash secured put expiring this Friday at 69 strike price. A covered call expiring at 67. So we are running our version of the covered strangle there. Then we've got SoFi covered calls expiring at $18 for this Friday. Then next Friday, we've got 50 covered calls on Hood, Robinhood at 50. We've got 50 covered calls at $45 strikes for next Friday. And then the following Friday, we've got PayPal $93 covered calls. We've got SoFi $20 covered calls, quite a bit of those, 400 of them. And then the last Friday of the month, we've got 100 covered calls at $25.50 on Marathon. It's another Bitcoin miner. So how do I feel about all of them? I feel pretty good. We're going to feature this particular position here in a little bit. The Enphase 69 put and $77 covered call here in a second. So now let's talk about the actual stocks themselves. We've got 9 stocks in the portfolio right now. I've got them set to total return. As you guys can see right there. Got them set to total return. I don't know what happened there. It wigged out there for a second. But these are set to total return. I don't know why it keeps doing that. I guess it doesn't want to play ball this morning. But those are set. I guess y'all just have to believe me. There's supposed to be 3 little dots here. There we go. Set the total return. So we got SoFi crushing it, Riot crushing it, Tesla not too bad, Amazon doing okay, PayPal not bad, Hood not bad, a double on Hood, Clean Sparks finally doing okay, Marathon's the only loser on the books, and Enphase is even doing okay. So maybe it's not even no longer poop phase. So if I would categorize these as investments versus trades, I would say that SoFi is an investment, Riot is an investment, Tesla is an investment, Amazon is an investment, PayPal is an investment, Hood is an investment, and then CleanSpark, Marathon, and Enphase are swing trades, essentially. So that is what's going on with them in a nutshell. So now I want to feature this particular position right here, and then I'll get with the comments. So is Enphase no longer poop phase? So we started this position a couple of weeks ago or so, bought 1,500 shares at 69.08, waited for it to run up a little bit, sold the cover calls at 77, brought some premiums through the door, then also had already sold cash secured puts at 69 bucks. So I'm like, if it goes down, I'll manage the cash secured puts. If it goes up, possibly manage the cover calls, or maybe I'll just let the shares get called away. Not really sure. Why? Because I'm not really sure if Enphase is the kind of stock that I want to keep chasing up, or if I just want to lock in some wins, because I'm fortunate that I was right on the entry point on those particular shares, on the 1,500 shares, brought some money through the door on the cover calls, brought $1,395 on the cover calls, qualified for about $8 of capital appreciation because I bought the shares for 69.08, selling them for 77. Would it be wise to just lock in the win and then just play it via cash secured puts? Because there's going to be a lot of uncertainty with the solar industry going forward because of Donald Trump and whatnot. So that's where I want to lean on you guys for a bit. What do you guys say? Do you guys think that this can go back to 100? Because I feel like 100 is probably where it wants to go. That's where it wants to trade. But is that really fair market value? I'm not really sure. So I want to lean on the chat and ask you guys, what do you think fair market value is for Enphase? Because I studied the charts a little bit, and the reason that I bought the shares outright at 69.08, because I was like, man, this would not be a bad spot to start a position right here. I didn't go super heavy because I thought that maybe it could go as low as 60, and I'd be glad to scoop up another 2,500 shares there, and that would put me at 4,000 shares or maybe even 5,000 shares, and I feel really good about it then. But what do you guys say? Let me catch up with the chat and see what you guys have to say. What's going on, Shamu? What's going on, SJ? What's going on, Larmo? What's going on, SJ? Excuse me 1 second, guys. We got to... All righty. Sorry about that. We actually had the housekeeper. She had some tacos delivered, and the dogs go crazy every time the doorbell rings. They act like they're going to go do something. Anyway, we got G Money over here, and we got the Duke of Wall Street over there running around in the office. So you might hear a little, dogs going crazy in the background. I apologize for that, but we got a circus going on here right now. Anyway, What's going on, Corey? I hope you're doing well. What's going on, Will? What's going on, Cassie? Vic, how are you? Tyler. Yo, TJ, I have 200 Tesla shares, and I noticed you don't have covered calls on yours. I do. I don't want to part with my shares. Do you think I can sell weekly covered calls on these guys at 8 Delta? You can. You can. Oh, nice. And I really got to take Nike more seriously. I just am not wanted to look into it. I don't know that there's anything to look into. It's Nike, right? Let me look real quickly. I'm not even going to pull it up on the screen. I'm just going to go look. NKE. It was like in the 70s, right? Oh, man. Gosh, that's attractive. It's like at 72.93, guys. 72.90. Yeah. Man. I mean, Bill Ackman loaded up. We'll see. We'll see. That might be something worth revisiting because the portfolio's at 9 stocks and I'd like to have 10. Maybe I'll reach out to Amit on it and see what happens. Thanks for pointing that one out, Mr. Premium. Appreciate you. Happy New Year. Hey, what's going on, Team Wheelers? Appreciate you guys. Alexandra, what do you think about BW LPG as long-term investment? They transport fuel, gas, and have 24% dividend. Is that another one of those energy transfer type plays? Those tend to be pretty well. I don't think stocks usually move on those, but the divvy's pretty nice. I grabbed some Nike puts today as well. Very cool. Steven, why not do cash secured puts? I'm letting mine get called away as they reach original purchase price. I would let Enphase get called away. You said yourself it's a swing trade. If they get called away, then they get called away. I think you get, yeah, I'm feeling that too. And then that one came from 9 to 8. 9 to 8. The portfolio would be in balance. Doesn't go with your gut, let your shares get called and allocate the money in another position. I just don't know enough about Enphase. And then it goes back to what my wife says. We don't need Enphase because we got Tesla. There's that. We don't need Enphase because we have Tesla. Those are my wife's famous words. And this was a get back trade. I wanted to get back like 30 grand, 30, 40 grand because I had lost some money on Enphase before. So there was that aspect of it as well. But I feel like there's money to be had here on the cash secured puts. I can keep doing 25 cash secured puts. So let's look at this trade a little bit and you guys can see where the money was made. So I pulled up Nike here. So here's Enphase. So there's money there on the trade. First of all, it might not get called away. So that's good news. I could sell the next round at 80, 82 bucks. That'd be great. That'd be ideal. But there's just so much more money on the cash secured puts, right? Like I got 3,300 bucks right at that same 69 bucks. So it's like you own them at 69. You want to get that capital appreciation, but you get a lot less premium. But mind you, I did qualify for quite a bit of capital appreciation, agreeing to sell them at 77. I'm going to qualify for whatever it ends up being. Y'all can help me out with the math. It's going to be like about $15,000 in capital appreciation. So those are the gimmies and the gotchas. You have all these shares working for you like little worker bees. Every dollar that goes up, that's $1,500 when you own 1,500 shares, right? So I think having this covered strangle on is very lucrative here at these levels. But that being said, I don't want to follow these shares up and then follow them back down. So I think that if it does go past 77, I'm going to let them get called away. And then I can always turn around and sell cash secured puts at like 72, 73 and keep playing that same game and maybe keep doing it at 25 bucks. If I feel a little bit more ballsy, then maybe I could do it at 30, 35 contracts and keep making $4,000 or $5,000 every couple of weeks if it gives it to me. And I'm just more comfortable on the cash secured put side of things on Enphase. But I am thankful for this small win here on Enphase. So yeah, I think that's fair. Nike is trading at higher free cash flow levels than in 2021 when it was trading at 150. above for Enphase. Word. What's up, TJ? Love, appreciate you. Still rocking with the 100,000. Yeah, they really are good premiums, man. They truly are. As a new person in wheeling, the one thing I struggle with is delta and strike prices. Is there a formula for this? I have 1K of KULR. Good morning, everyone. So let's go back to Tesla. There was a Tesla question here. I'm trying to get these questions answered here because I won't be able to be on here long today, guys, because I do got to go grab some food. So I've got 4,000 shares of Tesla, and I do have covered calls at 340, but they're for January of 2027. Why? Because I got to call my hand in the cookie jar. And I also had turned all of my attention and resources to TSLL when Tesla was down in the $200 range and ended up making like $374,000 on TSLL. So it wasn't that big of a deal to me. And I'm just going to have to babysit these covered calls for the next 2 or 3 or 4 or 5 or 10 years, probably. And hopefully I can get this up to a level that I'm comfortable eventually selling these shares. Along the way, I want to sell some cash secured puts. Along the way, if there's some bigger dips, I'll probably go revisit TSLL. I would like to get this position up to 5,000 shares at some point, though. Can you sell some covered calls on Tesla? Yes. I'd probably wait. Me, again, not telling you what you should do, telling you what I would do. When would I wait for? I would wait for earnings. I would wait for earnings, and then I would wait for Donald Trump to get sworn in and see how all that plays out. Maybe it's a sell the news event. Maybe this thing goes euphoric. It's going to be one of those two things. I don't think it's going to be a flatline thing, though. But you would have all the information. You don't have to guess. So I would just wait to get all the information, and then you'll know what the right thing to do is as far as selling covered calls and roughly the right strikes and so on and so forth. And then you can also roll those positions. There's also other things you can do that are a little bit more advanced. You can do like call credit spreads. I don't promote them on the channel because they take a lot more managing, a lot more experience, but they are definitely things that you can do as well. Whereas the short call gets away from you, you can just close it out, take your lumps, but then the long call is going to print for you, kind of like a put credit spread. So there's things that you could do. There's things that you could do. Do you typically sell covered calls on all your positions? I'm new to wheeling, traditionally a buy and hold investor. I was also a buy hold investor when I started selling options. I used to. That's a wrinkle that I added in 2024, where I looked at market conditions a little more closely in 2024, and I was okay with the occasional squatter. But I would say probably I'm at about 85% occupancy. If I look at the portfolio as like a hotel, I would say that I'm usually between 80 and 85% occupancy, and I have about 15% vacancy, if that makes sense. And that's probably where I want to keep it. If I could get a little more solid in my covered call game, I'd say I'd probably even knock it down in a huge bull market the way that we're in a huge bull cycle. I'd say it might even be okay to go 70-30, 70% occupancy and 30% vacancy, meaning squatters. That way you have some shares that are free to run. But also the thing that I added in 2024 is I added some leaps. So I was able to maintain high levels of occupancy, meaning covered calls, because I had long calls protecting the position. So I called it like a wraparound trade, if you will. Enphase is a good stock, but I don't think it's worth grabbing more just looking at how hard it's dipped in the past months. And it's also just like the earnings call was not that exciting. That's the other thing. Tyler Rustin at Tesla's a wild Mustang, and would not recommend selling weeklies on them, probably monthlies to start with. Yeah. If you're going to sell it, you might as well get a big chunk of premiums. I lurk a long time, and I've been doing some wheeling for a few months. How do I get the wheel tracker spreadsheet? You got to go to, I think it's Wheel Deal Shirt 777 at gmail.com for the spreadsheet. Hey, what's going on, Dex? Mike K, you're welcome, Tyler. You're welcome. You're welcome. You're welcome. So anyway, let me talk to you about another position here. Let me pull it up over here. Let me talk to you about SoFi. And we talk to y'all about SoFi. There's a lot of capital tied up on SoFi. And I'm just looking at capital efficiency. 2025 is the year of capital efficiency. Like every year, I want to get better at my game. I want to, it's like Michael Jordan, he was going through his career, and every off season, or Kobe Bryant was going through their career, and every off season, they added a wrinkle or two to their game to try to get better and better and better. And then when their career was over, you're like, oh my God, Michael Jordan's the GOAT, the greatest of all time. Kobe, he's top 5 greatest of all time. Because they constantly kept adding wrinkles to their game. Well, that's the way that I look at myself as a wheeler, is I always want to add wrinkles to my game. Because right now, I definitely don't think I'm the GOAT. Definitely don't think I'm in the top 25, top 50, top 100, but I strive to be. I definitely do think that I'm the GOAT for transparency. Make no mistake about it. I claimed that shit like 2 years ago, ran with that title, got the gold medal, and I'm going to have the gold medal probably for the rest of my life. Nobody will ever be as transparent as me because they have too much to lose. I just was one of those guys that I didn't give a shit. I don't care what you think of me. I'm very solid in my skin. I think that my faith in God helps me to not care what man thinks about me. So I'm like, whatever, I'm here to please him, not you anyway. So don't take it personal. But at the end of the day, I don't really give a shit what you think about me. It's all about him. So I was the right person for the transparency job. So that was my niche, if that makes sense. So that's what I want to get good at. There's other things that I want to get good at in this year, and it's capital efficiency. So it's like, we have $100,000, we have $500,000, we have $1 million. Is what is the best way to allocate those funds for myself or for one of our clients so that we can get the best value, the best return for our clients and for myself. So those are the things that I'm working on. That's the wrinkle that I'm working on. It's kind of like Shaq. If he could just learn how to make free throws, he'd be the greatest of all time, right? So he spent all his summers working on the free throws, hiring the guy that had the record for free throws, hiring, Magic Johnson, helping him with free throws and rhythm and all this other stuff. We all followed his career. So those are the things that I'm working on. So let me talk to y'all about SoFi. So here in this account, we got 150,000 shares at 725. So on the surface, things look good, right? Up a shitload of money. But there's 9 open option strategies, and it says that 70,000 of these shares are for sale. So you've got 40,000 of the shares for sale at 18. You've got another 40,000 shares for sale at 20. Then you've got 50,000 shares for sale at 15 for January. This was a hedge. Instead of buying puts, I was like, well, let me just sell some very aggressive cover calls. And sure enough, got called my hand in a cookie jar. But I was okay with getting these shares called away. But then looking back, I was like, I don't really like that approach, because when you tie up that money for way too long, knowing damn well that you're not going to defend those cover calls. But it's like, okay, well, that's a lot of money tied up for an entire year. Might have been cheaper when you look at the time value of money to just buy the damn puts if you want a protection to the downside. So I'm not real convinced that selling covered calls is the best way to protect for the downside, if that makes sense. And then these are the leaps that I had bought. I bought 200 leaps at 7, 200 leaps at 5. And then this is the bulk of the position. This is what I like to do. I like to just sell long dated calls because I don't want to mess with the position. So I sold long dated calls at 20, because then I was like, I'll be able to roll these to June and it'll coincide with Noto's payout. And I'll put them at like 25, which is that's when he starts getting paid. And then I also bought what I consider lottery leaps at the time, even though these aren't definitions of what the street calls lottery leaps. But I don't give a shit what the street calls them. This is what I call them. Just like I introduced backstop trades to the world, these are my version of lottery leaps. I bought the 10s, the 15s, and these are really lottery leaps in my mind, the 20s for June. And those are printing pretty well also. So what I've considered doing is buying more lottery leaps over here in the 20s, like about 800 more, and getting very, very aggressive with covered calls over here and letting shares get called away so I could free up a lot of capital to go sell cash secured puts. Like this could probably free up in the neighborhood of maybe $1 million in capital or something like that. So why would I do that? Why would I do that? Because the covered call premium on long calls is the same. So if you own a long call or if you own the shares, the covered call premium that you collect is the exact same. That's one. So it's capital efficiency. Two, SoFi doesn't pay a dividend. Those are the gimmies, the gotcha. The long calls expire. The long call is an eroding asset. Those are the gotchas. If the stock doesn't go up, it hurts a little bit more when the long call costs you money versus the shares. I don't know. It just feels like it hurts a little more when the math is like, it's kind of whatever. If you were selling cover calls against those long calls versus cover calls against those shares. So that's just a psychological component that I have to kind of get over. So anyway, that's something that that I'm considering doing, is buying like 800 more long calls on SoFi, and then intentionally trying to get, after maybe this next earnings, if there's a pump to like 2021, something like that, trying to get a bunch of these shares called away so that I could get into a larger cash position in case if there's a dip. So what dip would I be looking for? Good question. Glad you asked. Maybe Palantir comes back down to reality. I don't know. Maybe I'm dreaming, or maybe I'm not, because I understand a little something about valuations. I don't know. I feel like there's going to be something. There's going to be something along the way. Maybe I go do some homework on Nike. You know, Mr. Premium put that bug on Nike in my head. And it's a couple of times that he's done it now on the channel. Maybe I'm in a situation to where I'm able to start a brand new position in something with a shitload of cash. It gives a real good entry point. It's like a ticking time bomb, kind of like Fubo. I was in Fubo recently, and I missed this 200 or 300% gain. I almost bought 50,000 shares as a flyer last week on Fubo. Didn't, because I wanted to get the portfolio to 10 positions, and I didn't do it. So, you know, I'm kind of angry about it a little bit, but it is what it is. Anyway, what is Mav saying over here? TJ, what do you think about Siri? Buffett bought 32% of the company and has good dividend, juicy premium. Check it out. You're the best. I am not familiar with them at all. I will gladly look into them for sure. Hey, Julie Law, how are you? Hope everything's going well. So anyway, guys, that is what we got going on. We got 856 people that have clicked the link on X. I appreciate you guys. 134 people on YouTube. Looks like people started trickling in a little bit more. Maybe a Mid's marathon session finally ended, because I noticed that he was still live whenever I started this morning. Anyway, Alex H, what's going on? So anyway, just a recap for everybody, because I know a lot of y'all joined in late. This is what's going on with the portfolio in a nutshell. We got these positions that we're monitoring here for the end of the month. We have the Clean Spark covered call. Clean Spark is currently at 11:37. These expire this Friday at 12:50. Clean Spark is definitely one that I believe in a lot more than, say, Enphase. So I would be more compelled to roll these and try to get more alpha out of them. My exit price on Clean Spark is more in the $15 to $20 range, maybe even higher, actually. So I just feel like there's some easy money to be had there. And I also have these cash secure puts on Clean Spark, 400 of them, that are printing pretty nicely as well. So I would like to eventually put these covered calls for sale over here in March to match these clean spark cash secured puts and kind of create a version of that covered string. Enphase, we've already talked about that one. I think that I'm indifferent with the covered calls. They either expire in the money, out of the money. If they were to expire at like 76.99, that's ideal. I'd be able to sell more covered calls, increase that strike price to 79, 80 bucks the next round, try to get some more alpha there and more premiums as well, more capital appreciation. And then, keep lowering that adjusted cost basis. And then I'd keep rocking with these covered calls, maybe increase that strike price from 69 to like 72 or 73 on the next round. On the SoFi covered calls, we're already at 92%. I really don't see a reason to give any of that money back. It's 800 bucks. It's 800 bucks. It's 400 contracts. I could maybe see me doing it for 400. So people are like, is juice really worth the squeeze? I mean, it's one of those things. You're in this situation. You do this 40, 50, 60 times a year. Do the math. Do the math. Before I used to be real. This is another thing that I'm working on 2025 is don't be so frivolous with giving back premiums when you're winning a trade. And if you're actually okay with getting assigned, getting those shares called away, or you can just roll and increase your strike price to 19 or 20 and then get them called away over there, like fight for all your money. Like fight for all your money. Like, why am I going to give back that 800 bucks right now? I'm winning this trade. And that's just, it's one of those things. It's growth, it's maturity, it's experience. All that money counts, guys. All of that money counts. So I was always real quick to want to like book the win. Now I'm like, no, I'm going to let a lot more contracts expire because I'm going to get as much juice out of that lemon when I'm okay with whatever outcome, because I picked the strike price that I was comfortable with. And if I close this covered call right now, I'm going to give back 800 bucks and I'm not going to be in a position to sell another covered call right now. So it's like, what am I going to do? I just squandered 800 bucks. So that's, it's just a slightly different way of looking at it now. The hood $50 covered calls, I got to babysit those a little bit because I kind of played hood a little bit wrong on covered calls. I've got $50 and $40 covered calls for January of 2026. Luckily, I do have some long calls on hood at 30 and 35 bucks for January of 2027, I believe, that are helping me. Yeah, right here. So those are helping me a little bit. So we'll see. I'll have to revisit hood, but there's some work to do here. So I think 2025 is just going to be the year of cleaning up positions, taking some really, really big trades when the opportunities present themselves, continuing to build the real big cash position. And when the opportunity presents itself, I'm going to pounce, and I'm going to pounce really, really hard. And if one of these crashes, then that's when we double down. That's when we double down. So that is pretty much what's going on. Let me see if there's anything else. I appreciate you, Giorgio. Any moves with NVIDIA? That's my baby, like Tesla is yours. I've made some moves with NVIDIA in the past. I made a decision to rock with the SOXL, Shamu, because the premiums were good and it's cheaper, it's less capital. So you need something, baby? So that's the person I'm rocking with in that space. So y'all see the trades that I made there. There's another 200 contracts there that paid right at 129,000. So those are the three, or 131. So 131, 129, 129, and that's what I'm rocking with in the space. And this is my backstop trade for January of 2026. There was an opportunity to add another 400 contracts when it was in like that $27 range. I could have gotten more money, but I was like, I think that's enough exposure. I'm going to leave it alone for now. But NVIDIA is like, I don't know, like 7 or 8% of this ETF, and I'm just going to rock with that for now. So yeah, I don't know that I'm going to do anything with NVIDIA unless it were to go probably like to like 120. Then I would probably look to do something there. In a bull market, the coulda, shoulda, woulda thoughts will drive you mad. Fair enough. Appreciate you. 34th like. Same thinking here, brother. Thank you. Check that out. I sold a bunch of cash puts to start the wheel. All stocks are going up. Is that a good way to get going? Just wait to expire and do it again? Yeah, you just keep adjusting your strike price a little bit more and a little bit more and a little bit more. Yeah, SOXL is pretty good. I thought about doing some shorter dated cash secured puts on SOXL as well, but I'm just real comfortable with those backstop trades right now. I don't want anything that I have to babysit too much right now. And then Riot's just been the one. Riot's been the one that's been making me all the money. I had that situation with MSTX. I could have written it out and it would have all been great. But fortunately, I was able to pivot all of that money. I bought the shares of Marathon. I bought the shares of CleanSpark. I bought 25,000 more shares of Riot. And then I sold cash secured puts on Riot, made like 24 grand, sold more cash secured puts on CleanSpark, more cash secured puts on Marathon. So I've essentially already made all the money back from the MSTX debacle. And the portfolio looks a lot cleaner for me. So I don't have to deal with that anymore. What I learned there is just stay in my lane. Just stay in my lane. This is my lane right here. I don't need to be over there with the whole MicroStrategy thing. I still associate words like Ponzi and MicroStrategy. So, some people are like, well, maybe you don't understand the whole thing. And, that's fair. That's fair. What I do understand is over here, I know how to make a shitload of money. That's what I understand. And I understand that these here are all legitimate businesses or aspiring to be. Whereas with MicroStrategy, at the end of the day, I feel like they dilute and they buy Bitcoin. Is that a real business? I don't know. You tell me. So it's just in 2025, hold on one second. These dogs are going to go crazy again. Hey, guys. I'm going to stay in my lane. I'm going to do what I do. I'm going to sell puts. I'm going to sell calls. I'm going to collect premium. And I'm going to roll when it makes dollars and cents. My 1 year performance, Scott, was 69%. Anyway, TJ, the Wheel Deal signing off. As always, may your sky stay blue. Stock screen. Peace out. God bless you guys.